Okay, for this video, I wanted to cover a very simple example of a Form 6781. This is a form that's included with your U.S. tax return to report gains and losses from trading futures contracts. So Section 1256 futures and other types of straddles. So we've got a very simple example in front of us. I got the 6781 that's going to be going along with the Form 1040 for John. And then we also have a sample consolidated 1099-B that was prepared by the broker, sent to John, and then the IRS gets a copy as well. So on the 1099-B, we have a consolidated 1099-B, that is. We have a lot of information, right? So we have the 1099 div section up here where dividends and distributions are reported. Then we've got a miscellaneous income section, 1099 miscellaneous. And then we've got 1099-B here for the Section 1256 contracts. And then at the bottom also reporting the sales and other dispositions of other securities, right? So the section we're going to be focusing on here is the Section 1256 contract piece. So we've got line items 8 through 11. These are standardized line items. So on all brokerage statements, you're going to see them classified in the same manner. So 1A would be totally ordinary dividends, 1B is qualified, and so if you do have, and so on and so forth. So if you do have futures contracts in your brokerage account and you're trading those, you're going to see line items 8 through 11. So now what information are they reporting here? Well, so just a bit of background on 1256 futures contracts are traded on exchanges. And the nice thing about futures contracts is when you sell a future, you actually close out the future or you're marking to market the future at year end, you get capital gain treatment. And it's a combination of short-term and long-term capital gain treatment. And so what the broker does here is on line 8, they report the actual realized position. So for John, he opened the account in 2021. He realized $2,350 in real time, or not real time, but realized gains from actually closing out the positions. And then we have the unrealized profit or loss on the positions at the start of the year and at the end of the year. Now you notice at the start of the year it's zero because John opened this account in 2021. So he didn't have any unrealized gains or losses at the start of the year. But at the end of the year, he does have some unrealized gains on some open positions, and that amount is $1,301. And then the broker will total up the amounts for you based on the movements here. And so he's got 3,651 of aggregate profits on these contracts. And so this is the amount that is being reported on the 6781. So if we jump back to the 6781 here, we're going to be working with part 1 mostly here. At the top here, A, B, C, and D, these are potential elections that you could be making. In our case, we're not going to do those. So like for example, if you check box A for a mixed straddle election, you know, that would be a position where you have a mixture of 1256 contracts and non-1256 contracts, and you have a straddle position. And so you can make an election to basically back out the non-1256 contract. But again, in this case, we're keeping it very, very straightforward, so that's not going to apply. Another one would be, let's say you check box D for 1256 contracts loss election. If you realize a net 1256 loss for the year, you can make this election and carry back the losses to past tax years. So if you have positive positions in prior years that you pay tax on, you can actually make an election and carry those losses back and try to get a tax refund from the IRS. Again, we're not going down that path. We're keeping a very simple example here. So what are the instructions? Well, the instructions ask that if you are reporting 1256 contracts that you receive through a consolidated 1099-B, you should enter 1099-B here to start and then enter the broker's name. And so that's how we identify the account. So in this case, we have 1099-B, broker's name LLC, and then report the net amount of either gain or loss. Now you recall on the brokerage statement here, our aggregate profit or loss, line 11, is $3,651. So we report $3,651 of gain. Now, for lines 8 and 9, this is where we break out the amount between what is short-term and what is long-term gain. So again, this is one of the tax advantages of trading futures, is even in cases where you've realized what is arguably maybe a short-term holding period, or you're marking to market at the end of the year, you are allowed this breakout of 40-60. So 40 short-term, 60 long-term, which is obviously favorable because the long-term capital gains are subject to that lower tax rate, right? So a maximum of 20%, and potentially 23.8 if you've got the net investment income tax component. Okay, so that covers it. Let's go up to Schedule D to see how this is ultimately reported. So if I scroll up here, Schedule D, capital gains and losses. Line items 4, right? Short-term gains from 62.52, and then we see the 67.81 in there, right? So that 14.60, that's flowing through from the 67.81, and then line 11 here, we've got long-term gains flowing through from the 67.81 again, so the $2,191, and so that is ultimately how all of these pieces are going to be reported on the tax return. So I hope that was helpful. If you have any questions, please leave me a comment below, and I look forward to seeing you again soon. Thank you.